Ever wondered how credit bureaus hold so much power over your financial life? Imagine a world where your every financial move is being watched, analyzed, and scored. That's not a dystopian fiction, but the world we live in today, thanks to credit bureaus. Credit bureaus, or credit reporting agencies, are entities that collect information about your credit history. That is, how you've handled credit and debt in the past. They compile this data into a credit report, which is then used to generate your credit score. This three-digit number is more than just a number. It's a snapshot of your financial responsibility. In the grand of things, credit bureaus play a pivotal role in the financial ecosystem. They are the bridge between lenders and borrowers, providing vital information that helps lenders assess risk and make decisions on who gets credit and at what terms. Your credit score is like your financial passport. It can open doors to opportunities or slam them shut. It determines whether you get approved for that credit card or the mortgage for your dream house. It can even influence the interest rates you are offered, which in turn can significantly impact the cost of borrowing. In some cases, your credit score can even affect your ability to rent a house or get certain jobs. But here's the catch. While bureaus wield this immense power, they operate largely behind the scenes. The algorithms they use to calculate credit scores are proprietary and shrouded in secrecy, and while they hold this sway over your financial life, you may feel like you're at their mercy. But what if I told you these credit bureaus have secrets they'd rather you not know? Intrigued? Stay with me. As we delve deeper, we'll expose the hidden truths of credit bureaus, uncovering the secrets they keep under wraps. So buckle up as we embark on this enlightening journey into the world of credit bureaus and their mysterious algorithms. Subtitles in this scene are in red color. Did you know that credit bureaus use secret algorithms to calculate your credit score? That's right, the numbers that decide whether you get that dream house, that car, or even that credit card are determined by mysterious calculations that the bureaus keep under lock and key. These algorithms are complex mathematical formulas designed to analyze your financial behavior and spit out a three-digit number. Now, the exact details of these algorithms are a closely guarded secret, hidden away from the prying eyes of the public. Why? Well, there are a few reasons. The bureaus argue that keeping these formulas confidential prevents consumers from gaming the system. However, this lack of transparency also leaves consumers in the dark about how their actions directly impact their credit scores. If you've ever tried to improve your credit score, you know it can be a bit like shooting in the dark. You're told to pay your bills on time, not to max out your credit cards, and to limit the number of new credit accounts you open. But how much does each action really affect your score? Without knowing the details of these secret algorithms, we're left guessing. This lack of transparency can be problematic. It puts the power in the hands of the credit bureaus, leaving consumers to navigate the murky waters of credit scoring. After all, if you don't fully understand how the system works, how can you effectively play the game? Moreover, these secret algorithms aren't just mysterious, they're also incredibly influential. Your credit score can impact nearly every aspect of your financial life, from the interest rates you're offered to your ability to rent an apartment or secure a job. It's a powerful number, determined by an algorithm you're not allowed to fully understand. But that's not all. There's more to this credit bureau secrecy. What if I told you that your credit report might contain errors, and these errors could be costing you? Yes, you heard that right. It's as if we're living in an error epidemic. Credit reports, those all-important documents that can make or break your financial dreams, are not immune to inaccuracies. The prevalence of these errors is staggering. They come in all shapes and sizes, from incorrect personal information and wrongly reported late payments to credit limits reported as lower than they are. And it's not just a handful of people affected. We're talking about millions of consumers just like you who could have errors lurking in their credit reports. Now, you might be thinking, okay, so there's an error. Can't I just get it fixed? Well, in a perfect world, yes. You'd simply file a dispute with the credit bureau. They'd investigate and the error would be corrected. But we're not living in that perfect world. In reality, the process for disputing errors is often a complex, time-consuming labyrinth. First, you need to obtain your credit reports from all three credit bureaus because an error on one may not appear on the others. Then you must meticulously review each report line by line to uncover any inaccuracies. Once you've found an error, you must gather evidence to support your claim and then submit a formal dispute. But that's not the end of it. The credit bureaus have 30 days to investigate your claim, and even then there's no guarantee that the error will be corrected. These challenges can make the process of correcting errors feel like an uphill battle. But remember, your credit score, that 3-digit number that can determine whether you get that dream home or that car loan, is at stake. So, despite the complexities and challenges, it's worth it to fight the error epidemic. Because these errors, combined with the secret algorithms we discussed earlier, can have a significant impact on your financial future. Errors and secret algorithms, quite a combo, isn't it? But we're not done yet. Subtitles appear in red color in this scene. Ever thought about why credit bureaus exist in the first place? Hint, it's not out of the goodness of their hearts. Let's take a moment to peel back the curtain on the operations of credit bureaus. These entities aren't charitable organizations or public services. They are, in fact, for-profit corporations. Yes, you heard it right, for-profit. They generate revenue, and quite a substantial amount at that, by selling credit reports to lenders. Now you might ask, why is this significant? Well, let's dive into that. When a lender, say a bank or a credit card company, is deciding whether to grant you a loan or a credit card, they turn to these credit bureaus for your credit report. This report, essentially a snapshot of your credit history, helps them determine your credit worthiness. The more reports they buy, the more money credit bureaus make. But here's the catch. The credit bureau's primary customers are not us, the consumers, but these lenders. And naturally, like any business, they are geared towards serving their customers' interests. This is where the conflict arises. While credit bureaus are obligated to provide accurate information, their profit-driven nature can sometimes overshadow their commitment to consumers. To put it plainly, the more credit reports they sell, the higher their profits. And to sell more, they need to keep lenders happy. This can sometimes lead to a lack of diligence in ensuring the accuracy of the reports, hence the error epidemic we discussed earlier. This profit motive can also influence the way credit bureaus respond to disputes about inaccuracies in credit reports. It's no secret that dealing with disputes can be a costly and time-consuming process for credit bureaus, and every minute spent on resolving disputes is a minute not spent on selling more credit reports. So we have secretive algorithms, rampant errors, and profit motives. Can it get any more shocking? Let's find out. Scene script. Feeling disillusioned with credit bureaus? Don't worry, you're not powerless. Indeed, the power to change lies within your own hands. Yes, there are complex algorithms, errors, and profit motives in play, but these need not dictate your financial health. Your journey towards better financial health starts with the simple act of regularly checking your credit reports. Remember, the credit bureau is obligated by law to provide you with a free credit report every 12 months. This report is a snapshot of your credit history, a financial report card, if you will. So just like how you'd keep an eye on your health checkup reports, you should be keeping an eye on your credit reports. Now, during these checkups, if you spot an error or discrepancy, don't hesitate to raise a dispute. These errors could range from a simple misspelling of your name to a loan you never took out. Disputing these errors is your right, and it's essential to ensuring your financial report card accurately reflects your credit worthiness. But what about maintaining good credit habits? Well, it's like maintaining a lifestyle, paying your bills on time, keeping your credit utilization low, and not applying for credit too frequently are the financial equivalents of eating well, exercising regularly, and getting enough sleep. They're the habits that will keep your credit score healthy and robust. So, don't feel disheartened or overwhelmed by the secret algorithms and profit motives of the credit bureaus. Instead, focus on what you can control: your credit habits, your vigilance in checking reports, and your determination in disputing errors. By taking these steps, you're not just protecting yourself from the unseen mechanisms of the credit bureaus, but you're also shaping your financial future. You're proving that you're not just a number in an algorithm, but a proactive individual taking charge of your financial health. Remember, knowledge is power. Now that you're in the know, you can start to take control. Please note that all subtitles for this scene should be displayed in a bold red color to ensure they stand out and are easily readable for the audience.